Hello there everyone. Have you ever heard about the latest update from the Reserve Bank of India? If you use a credit card or ever plan to take a loan, listen up. This could impact your credit score in a big way. Starting January 1st, 2025, RBI's new rules will change how your credit score is updated. Let's break down exactly what this means for you. Whether you are a credit card user or someone just trying to manage your finances better. Hi, welcome to Freedom Money English channel. I'm your host Anupam Anand, and today we will be talking about the new guidelines from RBI. These new guidelines will directly affect your credit score, which comes from credit agencies like SEBI, Experian, Equifax and others. These agencies, called Credit Information Companies or CICs, get data from banks and NBFCs, also known as credit institutions. So what's new here? Previously, your credit score was updated once a month, usually after the end of the month. But now from 2025, it's going to happen twice a month. This means you will be able to see your credit score change more frequently. It's like getting a bi-monthly report card for your financial behavior. Why does this matter? Let's take a look. More frequent updates mean a more accurate reflection of your financial health. Imagine you take out a personal loan on the 5th of the month. Previously, you wouldn't see that loan reflected in your credit score until the next month. But now, under the new system, by the 15th, your score will already reflect that change. This means faster feedback, allowing you to react soon. So if you make a big payment, like paying off a chunk of your loan, it will show up sooner, possibly boosting your credit score by mid-month. This is fantastic news if you are working towards getting a loan approved or improving your credit standing. But hold on. This also means you will need to manage your credit utilization differently, especially when it comes to credit cards. Let's talk credit cards. One of the biggest changes will affect how people manage their credit utilization. Many of you might already pay off your credit card dues just before the statement date to keep your utilization low and your credit score high. But under the new RBI guidelines, if the banks report your credit usage on the 15th and your statement gets generated on, let's say, the 19th, you could be caught off guard. The credit agency might see a high utilization rate mid-month, even if you pay off your balance later. This means you'll need to think about paying your dues earlier, before the 15th, to keep that credit score healthy. I know, sounds like a lot of work, right? It could mean changing how you plan your monthly payments. But trust me, this can help you avoid any unpleasant surprises when you are applying for a loan or even a new credit card. Now, let's talk about the positive side of these frequent updates. With more frequent updates, changes in your financial situation will be reflected much faster. Paid off a big chunk of your debt by the 10th of the month? Great. By the 15th, your credit score will show that progress, giving you the advantage when it comes to applying for new credit. This quicker reaction is great for people actively managing their credit. You no longer have to wait for a month to see the fruits of your hard work. But let's also address the potential negative impacts. For those of you who pay off credit just before the month ends, this new mid-month update could catch you at a time when your balance is high. This might mean a lower credit score temporarily, even if you are making all the right payments by the end of the month. To handle this, consider paying off parts of your balance before the 15th. This will ensure that your score isn't negatively affected when the bank reports to the credit agencies. Another major impact, it's going to push us all to be a bit more disciplined with our finances. Think of it as a nudge from the RBI reminding us to be responsible with our credit. Timely payments and keeping that utilization ratio low will be more important than ever. If you have been in the habit of waiting until the end of the month to pay off loans or bills, this new rule is a game changer. Miss a payment by the 15th and you could see it reflected negatively twice in a single month. The good news? It means more accountability and more motivation to stay up on the top of your finances. So, to sum it up, these new RBI guidelines are bringing in faster credit score updates, which could be a good thing or a challenge, depending on how you manage your finances. The key is to stay proactive, be disciplined, and plan your payments ahead of time to ensure your credit score stays healthy. If you found this video helpful, make sure to like, share, and subscribe. And let me know in the comment section, how do you plan on adjusting your financial habits with these new RBI guidelines? I would love to hear your thoughts. Thank you for watching.